Hello there. You are welcome to today's update right here from our geopolitical stores. While the BRICS alliance is strengthening its banking system, the U.S. seems to be on a downhill. In the last 3 years alone, 15 U.S. banks collapsed, renewing fears of financial instability across the country. The BRICS bloc has pushed de-dollarization efforts, especially since it expanded its numbers. Now, the pressure is mounting on the U.S. dollar, as the country's banks face over $500 billion in unrealized losses, according to a new report. A finance expert at Florida Atlantic University revealed that the United States' unrealized losses on investment securities are over $500 billion as of the end of Q2 2024. This is a slight downtrend from the first quarter of the year, a decrease to $513 billion from $516 billion. However, it's still a significant loss for one of the strongest economies in the world. Banks are now saddled with more than $500 billion on the balance sheets in their papers. The development shows that the U.S. banks are at risk, while the central banks of BRICS are massively accumulating gold to hedge against the U.S. dollar. Rebel Cole, Ph.D., Lynn Eminent Scholar, chaired professor of finance in FAU's College of Business, says that despite the slight downtrend in unrealized losses for banks between quarters, U.S. banks aren't in the clear. The 10-year Treasury yield has been extraordinarily volatile for the past 2 years as inflation has increased. Banks are also affected by their exposure to uninsured deposits, so the combination of unrealized losses and exposure to uninsured deposits can be particularly pernicious. This combination can be especially lethal as the U.S. dollar suffers from both inflation and BRICS pressure. Growing U.S. debt and bank losses weakens U.S. dollar and economy against BRICS. Furthermore, the United States debt has continued to rise this year past its all-time high. The current debt nationwide sits at over $35.7 trillion. Over the last 3 days alone, the debt has surged by a noticeable $345 billion. The U.S. government is currently paying $3 billion in interest on its debt per day. The increased debt and unrealized losses are only putting more pressure on the U.S. economy, chagrin to U.S. investors, but to the pleasure of BRICS. While the unrealized losses are only on the balance sheets, they could become a liability when the banks require liquidity. This puts the U.S. banking system under pressure as BRICS continues dumping U.S. treasuries and the dollar. The BRICS alliance is also spearheading the de-dollarization movement by convincing developing countries to end reliance on the dollar. With more countries looking to dethrone the greenback, further pressure could be put on U.S. banks, and in turn, the entire U.S. economy. As of now, the total U.S. debt has jumped to $35.7 trillion, stressing the U.S. dollar. The U.S. debt scenario seems to be inflating with each passing second. The debt statistics have ballooned like any other metric recently, adding significant stress to the already overloaded U.S. dollar. The U.S. debt statistics now. As per a recent post by the Kobasi letter on X, the U.S. debt stats have ballooned to a new level. The U.S. public debt has now reached a staggering $35.7 trillion mark. Over the last 3 days, the debt has surged by a noticeable $345 billion, adding more pressure on the U.S. economy. The post later adds how, since June 2023, federal debt has surged by nearly $4 trillion, or by 14% statistically. At the same time, the portal draws attention to the nation's current GDP stats, which stand at $1.5 trillion, or 6%. This roughly explains the complex relationship, adding that the U.S. economic growth is considerably slower than the pace at which the nation accumulates more debt. Breaking. Public debt has jumped $345 billion over the last 3 days, hitting another record of $35.7 trillion. Since June 2023, federal debt has surged by a massive $4 trillion, or 14%. Over the same time period, U.S. GDP is up just $1.5 trillion, or 6%. In other words, the national debt has outpaced economic growth by 2.7 times over the last 16 months. The U.S. government is currently paying $3 billion in interest on its debt per day, highlighting the stark metric's long-term implications. Pressure on the U.S. dollar? Rising debt metrics are dubbed lethal for the U.S. dollar. For instance, spiking debt levels can trigger high levels of inflation expectations, adding more pressure to U.S. dollar demand. At the same time, a ripple effect can happen, compelling the Federal Reserve to spike rates, making the dollar expensive. Although hypothetical for now, the current scenario is compelling investors to think from all sides to reduce their risk exposure. The rising debt stats can also erode investor confidence, promoting them to pivot to other lucrative investments like gold and Bitcoin. The US debt-dollar relationship also comprises long-term risks. If the debt statistics continue to explode, it can prompt the dollar to decline in value compared to other currencies. Higher debt statistics can also be detrimental to the US government by increasing borrowing costs, which can, in turn, slow down the region's economic growth. Here is where we wrap things for today. Hope you found this video interesting. Do stick around for more and related updates right here at our channel. Don't forget to like and share as a means of supporting what we do. Goodbye for now.